it's about the knowledge about your situation, because every situation is so different. There'll be an outcome each time. I could bring you to Halifax, and I could bring you to Halifax, and one of you will get rejected. And then you come away and say Halifax is such a rubbish, lender, and you come away and be like, I love that. That was sweet, man. You're feeling yourself. You got your house, innit? But the reason why it's different for both of you is because you're different people. You understand? You've got a different circumstance. You might have kids. You might not have kids. You might have 10k worth of debt. You might not have 10k worth of debt, but you might have defaulted on a debt once. You know what I mean? You might be on 50 grand. You might be on 100. You might have a deposit of 20,000. He might have a deposit of 60. So it's all relative to your circumstance. Finance is almost like jigsaw. It's not a case of is there a scheme or is there a riddle for me to come and do. Because bare people do it to me. They come up to me and be like, what's the trick to do this and that and this and that? And I'm like, brother, I don't know what you're talking about. How much do you earn?
Yeah, what can you afford?
What can you afford? Because once I know your information, I can put you with the guy that will look after you the most. You understand? And that's what real finance really is about. It's the same way when you're looking at stocks and shares. Someone might come to you and say, Google stocks and shares are the sweetest, but bare man can't afford Google shares for it to be sweet like that. You understand?
Yeah,
and it's the same thing with the mortgage situation. Yeah, everything's all sweet. You can get money, but it's all about what you can do in your circumstance. Because finance ultimately is about you. You understand? It's about what you can gather. It's about how much you can save, how much you can stack, how much you can be stringent within your day to day. Because sometimes some people are fortunate. They, great granddad knocked his clogs. They gave him 100 bags. Man's nice. Certain people, they don't have that luxury. They have to grind and save up maybe £200 every month for the next couple of years with their missus, and then hopefully they can get something. You know what I mean? So every situation towards the journey of getting a house is different. So I'd say the biggest thing is making sure that you've got your ducks in order. You know what I mean?
All right, guys, wait, hold up. So we looked at the analytics, and apparently 25% of you who watch this podcast are not subscribed. Now, that doesn't make sense, because if you're watching this podcast, then you clearly like it and you clearly want more. So the best way to get more is to subscribe. And guess what? Even do another thing, subscribe. Hit that little bell button and put the notifications on. So when we post this exquisite content, right, you'll get it directly in your notifications. So subscribe right now. Thank you.
All right, welcome to another episode of the Goodman Factory podcast. You have myself, Goodman Manny. You have Goodman Dimeji, and I'm pleased to welcome today the famous, the infamous Toks. Goodman Toks, yes.
Yeah, thank you for having me, guys. Love
it's good to have you here, bro.
No worries, good to have you here still. So, I mean, before we get started, as we do always, how are we doing today, fellas?
Yeah, I'm going to keep it honest as usual. I'm all right, but it's been a hard few weeks. I've been robbed twice. For anyone out there who's had their catalytic converter robbed, I'm with you. It's hard. It's not easy. It's not a nice feeling being robbed, actually. It's quite scary. And yeah, there isn't actually much out there in terms of like helping you when it happens. I kind of feel alone, lost. I'm very wary of my surroundings when I leave the house now. I always feel like I'm being watched. So there's a bit of paranoia. When I go gym, I'm like, is my car going to get robbed again? I come inside, I'm like, who's watching me? Who's following me? So that's kind of where I am right now.
Sorry to hear that, man.
Yeah, thank you, bro. Yeah, just try not to let the paranoia get to me too much. On top of that, had 2 bikes robbed as well. So it's almost like never ending. This is a space of a month. So I do feel like a target. I feel like someone is just waiting for me to slip up so they can take something else. But I'm just trying to check in on myself and I don't know, be open about how I'm feeling, because I guess no one will ever really know what's going on in my mind unless I share.
Yeah, no, good, man. Respect for sharing that still.
Facts,
Thank you, bro.
Respect for sharing that still. How you feeling, Toks?
I feel good, man. I feel good. It's one of them ones, life's ups and downs, but do you know what I mean? Oh, it's one of them ones. Life's a case of ups and downs, but I just feel blessed, man, because every day I just think about where I started off from to where I'm ending up and where I feel like I'm gonna go. I just always feel good. Obviously you get your days though. Don't get me wrong. Like if you catch me on my days, I might not even be. I'm respecting what this is. I'm thinking to myself, why don't I go out and be telling people when I'm feeling shitty. Because really and truly, I'm always the first. How you feeling? Yeah. When the days that you're not feeling that way, it's like, brother, you know what? Yeah, don't talk to me about. Don't worry about my feet. You know, you get a bit
realness,
a bit defensive. But yeah, that's a good way to approach it. To be fair, because at the end of the day, you know what I mean. Although I'm feeling good now, I've had my days where it hasn't been that. You know what I mean. So it's always good to express yourself like that, and I feel like that's something I'm picking up because this is a nice flow, you know what I mean? Because the way you done that, it wasn't like you're looking moist for it. It's like, yeah, it's real, you know. That's
you know
real.
what? Funny enough,
I
I find it a lot easier to open up on a podcast than I do in real life or outside of here. I do feel like we have a safe space here, and you know, no one needs to feel any type of way expressing how they feel and what they go through. You know, we're a community of men and, you know, just genuinely good people who are willing to listen and speak and help each other move forward in whatever we're going through. So yeah, this is like the easiest space for me to open up.
True. Nice.
Yeah, man, it's good. It means the Goodman Factory is doing something. If not for our viewers and our listeners, certainly for us. And I can relate to that as well.
How are you feeling, bro? How are you doing?
Yeah, I'm good. I don't mean that in the vague masculine way. I genuinely feel good. I broke up from work last week. School's out, so yeah, I'm just trying to make the most of my 2 weeks off. Got family staying with us at the moment, so yeah, I mean, trying to get into the Christmas spirit. I'm really not like a Christmassy person, but I'm trying to make the effort because it's like my daughter's first Christmas here in London. We've got family staying, so we're hosting, but it's weird because of, like, the whole COVID situation's just.
It's really messed things up.
It's just weird, yeah. Like, you know, we were saying before the podcast started, I had 2 family members tested positive, and they tested positive at a time where if it was one day later, Christmas is cancelled because we couldn't go over to my family's house if they were both isolating. And so it's like every day we're just waiting to find out, is someone else going to be now testing positive? Because if that's the case, it means we literally, you know. So, but I you know, I'm not gonna take it down that road. Just take our blessings. Like, thankful that I've got family to be able to visit. So yeah. So other than that, I'm good. So yeah, I mean, let's get straight into the episode. So, you know, the last episode we spoke about money, we spoke about finances to a degree. I wasn't there for that episode, but it was a great episode. Go check it out, please, if you haven't already. Today's episode in particular, still on the theme of money, still on the theme of finances, but we're going to speak specifically about property. And we're going to take it from the very ground level. You know, we're going to talk about the importance of owning property, property in different contexts and different communities, but also looking at the advantages and disadvantages and maybe who it might be beneficial for. And so that's the reason why we've got our special guest Toks on the program today, on this episode, because Toks, you are actually a stock. No, you're I was about to say stockbroker. You're not. Yeah, if you are, I mean, call me. No, you're a broker. Do you want to talk a bit more about what it is that you, well, what you are, what you do, and a bit more about that?
Yeah, sure. So, I'm a mortgage advisor. Obviously, you know, people give it different terminologies, like, you know, broker. I don't really like the word broker because it's on a business side. My side and the way I offer my services is mostly, you know, advice. I'm an advisor. Same way you see a guru or like, you know, your gym instructor or whatever the case is, that person's there to particularly know your circumstances financially. So I'm a mortgage advisor. I've worked for banks. I've worked as an underwriter within banks. And obviously I've worked on the whole of the market. So basically all the banks that you see on the high street, you know, up and down East Ham High Street or Stratford, whatever, whether it be Nationwide, NatWest, Halifax, I've ran with them basically, as well as banks that you're not going to be aware of that you just won't know about. I ran with them as well. Every lender works differently. Every bank has its own rules, and every bank changes its rules regularly. Like, you know, the country of UK will change their rules, the country of Denmark will change their rules, and within your own households, I'm sure you guys will have rules that work for you. You know, you've got a little daughter, there's going to be rules that you're going to implement with her when she's young. She gets to that certain age, you can't run them rules. And likewise, you get me, there's going to be things that with your relationship, with your family, rules that work, and then eventually it changes. So my job is to also monitor the rule changes and express that to the clients I'm working with at the time. So the idea is that I'll match you to the best deal, as well as making sure that we actually get the deal approved, because there's no point in me saying, oh, this interest rate's 1%, but you don't meet the lender's requirements. It don't make no sense. So I'm always on the phone to lenders. Literally just come from an appointment just now. So yeah, just a case of ongoing, just speaking to people, chatting to them about their finances and just helping them out. But I've been in the industry finances for like 10 years now, a long time. So I worked as obviously opening bank accounts, and then just moved on from opening bank accounts, giving out loans, to becoming a mortgage advisor, getting myself qualified, and just helping people out with putting through loans and getting them their first house.
So do you work as a mortgage advisor for a bank now, or
no? I work as a advisor for a firm basically. So the way it works is that I'll meet people through estate agent offices. So there'll be different estate agent offices that will like refer me people that want to speak about mortgages, or even just people around me, like my friends and my family might come to me and refer me people as well. I just chat to them, and then you get me, if they're ready to buy something, I'll help them and guide them through the process, speak to the estate agent and do whatever needs to get done to help them get the property basically. But yeah, I don't work for a bank anymore. I work for the whole of the market. So I work for a firm, but basically I've got authority to work with all these different banks. So when I call them, they know who I am basically, and they'll give me whatever information I need, or get whatever I need to get pushed through basically.
Okay. So clearly, because it's your job, so you must be quite passionate about it. So I'm going to assume that you come from a point of view where you think property, owning your own property is important.
Yeah. My mum put me on. To be fair, it was my Marge that put me on. She's been on that from day dot. To be fair, so when we were growing up, she everything's humble. Coming from a different country, you don't come with much in your pocket, but the background, obviously, family wise, is that it's normal to build your own house from the ground up. You get me? So the idea is that if it's normal to build your house from the ground up from the get go, and you come to a new country, you kind of want to keep that momentum basically. So yeah, she the first thing she done is she stacked up and started buying houses and speaking with advisors like myself. And she was just like, look, if you're going to work in finance, you best find out how to do this mortgage thing, because I need some help. You know what I mean? She gave me all these mortgage papers. I was looking at it like, I don't know what you're on about. I basically know how to open a personal bank account. She's like, nope, you need to know what this is, this. And I was like, this is mad. So then I just started doing research, shadowing other mortgage advisors, seeing how they work. Obviously reading it into documentation and just getting myself booked in for the qualifications. And then obviously as you work in a bank, you get the real first-hand experience, because obviously reading something to dealing with human beings, completely different. But obviously you work with one bank to working with all of them, you realize there's a methodology to how they work and what they're looking for basically. So it was just a case of the family had it in mind that property was an important thing, because at the end of the day, you can make as much as you want, but if you're looking to pass something down to somebody, you see how Bitcoin's running now, you see how currency runs, you see how things can fluctuate, inflation, blah blah blah. But one thing that don't run like that you can keep passing down from generation to generation will be that asset that you own, like a house.
Question. So one of the things I hear quite a lot regarding owning a house is leasehold, freehold, all of this stuff.
Yeah.
And it's normally accompanied by, oh, why would you invest in this or buy this if you're gonna have to give it up in so years, or you don't really own it? I'm not too clued up on the whole mortgage and buying a house thing myself, but I'd like to know more. So can you kind of like elaborate on that? So what are like the pros and cons of buying a house?
The pros and cons. So the cons obviously is the fact that you've got a debt. Like if you're using it through financing, that is anyways. Like, so we're talking about financing, because obviously if you've got £1 million, you could buy a house. I don't know. Can you guys see a con? If you're a millionaire and you bought a house cash, do you know what I mean? Like really, unless you can formulate one. But in terms of using finance to buy a house,
right?
The con would be the fact that obviously you've got now a big debt that you're responsible for. So obviously you're responsible for the bills that you pay, you're responsible for your mobile bills, you're responsible for all types of things. But the difference between those type of things is that if those things are pulled from your rug, like T-Mobile says, you're not paying no more, you know what I mean? You lose your phone, you get another one. You lose your house, you're homeless, You lose your house, and not only are you homeless, your credit rating is pretty much mashed up. So that's one of the cons, is that there's a big responsibility that's going to be in your head,
right?
And you have to pay come rain or shine, no matter what the weather is, basically. So if you're sick, pay me. You get me? Have you watched Goodfellas when he's like where they do the bust out of the restaurant, and the guy's like, look, whatever the situation is, you have to pay me regardless. If you're sick, fuck you, pay me. If you're this, if you pay me. The bank works like that, but even colder, because there's no human being you can talk to. Literally, it's a case of the payments due. Oh, I broke my leg. That's your problem.
You signed the contract.
You signed the contract. You have to pay. But there's provisions in there. Obviously, we always recommend you keep, a nice stack there in case of periods of unemployment, which is one of the things that affect people. Obviously, there's also getting insurances out in case you get sick, like what they call it, income protection. So you can get yourself a set amount of income paid to you if you're to be sick or have an accident that stopped you from doing your actual job. Then you've got other things. Obviously, you've got children, both of you. So if God forbid you were to pass away, that mortgage will be paid off. If you were to pass away, or if you're to get a critical illness, or maybe you get cancer or have a loss of a limb, then you can get that. You can get something paid off as a lump sum for the property. So those kind of help with the drawback. But obviously, not everyone believes in those type of things. But those help with those drawbacks. Now the positives are basically you now got an asset. Now, like the way it works in this world is that there's reality and there's a system. You understand? Now, with owning properties and owning assets, that is reality. Because from the dawn of man, before England was called England, before you were born, before I was born, before your everyone needs to have a house. Yeah. Everyone needs to have some type of what do they call it? Shelter. Now, obviously, we've overcomplicated shelter to the point where now, you have to get financing to get shelter in certain parts of the ends because it's so expensive. But shelter is one of the main things. Food, shelter, protection. There's certain basic things that humans need as a necessity, and it just makes sense as a pro that you want to be able to own your shelter. You don't want to have a situation where next man can come tell you have to get out of your shelter. So if you own the shelter, the thing about finances, although you have to pay, you get me, the bank to for the money they loaned you, the bank don't really care what you do to your house. They don't care if you paint it red or pink. They just want to make sure that you don't break the house and you live in it, which you'll be doing. So that's one of the benefits. And the other benefit is obviously you've got something to leave behind for your family, because you're not going to be here forever. And at one point you're gonna want your family to have the ability to step up. And I'll be honest with you, a lot of the clients that I see that are young, like let's say young being my age and below, their families are putting them on bigly because it's hard to save up a decent amount of money to get yourself ready for a property. So you'll be doing your family a favor moving forward, because if you can get yourself a house now, then you help your family using that house to help them, then they could do the same thing. And by the time you know it, none of your generations will ever be homeless, basically, if you put things right and pattern it right. Hence why there's no point in writing a will, you hit me, if you ain't got nothing to give back. You can't say, I got a stack of 50k. No, bruv, they'll hand that out quickly. But you got an asset, like a property, that's something where a will is like, you need a will for that. You know what I mean?
I just want to go back to something you said, because you mentioned, if you own a property, then you will then be able to support your family and help them get a property. And that sounds a lot like what I know certain communities do. In particular the Asian community. So I know like Indians and Pakistanis, because I grew up around many of them, a lot of my neighbors were, and I watched them over the years do what I thought was quite a simple formula, but it was very confusing to me as to why I didn't see it as much in the black community in our current time. I'm aware that did probably happen a bit more in the 60s and 70s. And what I saw was young people getting married. They'd get married, and then, I may be wrong, so in the comments, please correct me. But either, I think it was the wife, she would then go and live with the husband's family, or maybe the other way around. And what they would then do is they would put all their money together, everybody, as in the family, put their money together. They all save within that household. So the married couple are living there for 6 months, a year, 2 years, whatever it is. And then that pot of money, they then use it to buy their property. The married couple move out. And then when another family member, maybe the brother of the groom or the sister of the bride, whoever it may be, they just repeat. So they will have family members, they will take them in if necessary, and then they all just basically save up, and then they buy another property. And so what happens is within the family, not within the marriage, not within the couple, within the family, you now have 2 properties owned, 3 properties owned. And it was everybody chipped in it, but everybody benefits from it because it's that formula. And that's something I haven't seen as much within the black community, even the whole living with your whole family members, just, so what do you see from your perspective as the formula that works the most, and who does it best?
I think with that being said, what you're saying is so true. Like, you do see a lot of people from that community doing that. You do the black community, surprisingly enough, do it. I think it's just a case of within the black community, everything's hush hush because everyone's all about the evil eye. And even within the Asian community, you know what I mean? They don't really go around. It's only because you've seen it firsthand. But even with the Asian, they don't go around telling people, "Oh, this is what we're doing." It's almost a case of, if you know, you know. You know what I mean? So yeah, in the black community, obviously, you know, the Caribbeans have a scheme called the Pardoner Scheme. We have another name for it in Nigeria. I forgot what the name is.
Is it Ajo?
Ajo. You understand? You get me? The Ajo. You owe me money for this one. Still, I'm giving out the gems and that. But yeah, the Ajo scheme. So the idea is, especially with properties or anything, when you're looking at it from a point of building assets, yeah, I'll be honest with you, yeah, very, you know, people can build assets on their own. It's possible. It is. But the family unit is the strongest unit. As in, that is where strength comes from. As in, me, you, everyone here can basically will know that without their family, without their parents, without the support systems of their cousins, brothers, sisters, whoever, you wouldn't be where you're at right now. No matter how much you feel like you do everything on your own, ultimately you get support, and the support initially is from that energy system, which is the family unit. So obviously everyone's family unit is different, so some of these gems won't work for everybody. But if you can get even family or friends or people that you trust really a lot, you can do anything in this world, man. Anything in this life, especially when it comes to property. So within the black community, I've seen it because obviously I've helped black people get, you know, mortgages as well. They've got situations and systems in place where their family, you know, have like maybe 3 or 4 properties. Dad's got like maybe 2 buy-to-lets. He releases equity in a couple, slaps it onto the daughter so she can go get her own house with her husband, and then so on and so forth, basically. So it is something that's done. I think it's just a case of obviously we live in a society right now where everybody's about themselves, and it's almost a case of it's really cool to be about yourself, and it's really cool to live in a nuclear, you know, they call it a nuclear family, you know, 2.5 kids. I don't know how you get half a kid, but you know, let me know when you chop them up and that, and then they become home maybe when they're like 20 or something. I don't know, but as in that was the popular system. But I think if you look back at the Asian community and the African community and the Caribbean community's original systems, it's extended families, extension. You know what I mean? Because like I know some people's families where they've got 9 brothers and sisters, you know what I mean, let alone talk about their cousins. But if everyone was to be on that type of smoke in terms of, all right, we're all gonna put down a bit of change, maybe £100 a month, and we get maybe the oldest adult in the family who's the most responsible to take the peas, and they start dishing it out to everybody one by one to get a property, but everyone could get a house. Yeah, man. You know what I mean? But it's just a case of, it's about what you follow. It's either you can follow the whole scheme of I want to do it myself, and people, you know, I'm not going to knock anyone that does it themselves, because some people can. They have the ability to. They've got the earnings, they've got the capacity, and for some whatever reason, because not everyone's family is helpful, they have to do it themselves. But if you don't have to, and your family are happy to support, there's no shame in that, man. There's no shame. Maximize every opportunity to get what you need to get done in this life, you know. Yeah. No, it sounds so simple. And I'm not going to say it doesn't happen, because like you said, you come across Caribbean families, African families that do it just as well, maybe sometimes better than some of the Asian communities. But I know from my personal point of view, what I've seen more is more individuals feeling like they have to use their 9 to 5 to save, whether they're with a partner or not. And we know that actually it's very difficult to get onto the property market right now, purely because of the price of properties, especially if you're living in London. But then the cost of living is also going up. And so, you know, forget like shopping and stuff like that. Even if you want to rent, it's very difficult for you to try and rent and save if you're spending $1,200, $1,300, $1,500 just coming out of your account. You don't really have that much left to be able to save. So actually, I think you made a great point there about if you can do it as a unit, it just makes sense. Yeah. It just makes always makes sense as a unit. I think it's one of them situations where a lot of people on their ones try and do everything, and I understand, you know, that's the society that we're in. But sometimes when you're buying a house, yeah, you can do it, but just understand it's going to be hard. It's going to be tough. It's not going to be easy. But the finances are there, and to be fair, although you know London's expensive, it's a case of there's always a budget for everything in life. So even if you're doing it on your ones, you can probably buy a house on your ones still, but it's just a case of it won't be what you want it to be. You understand? That's what it is. Do you know what I mean? Like if a man says to you, look, we could give you 60 bags of what you're telling us. You got 10k, 60 bags, that's 70 grand. So what are you gonna do with 70 grand? Can't buy in London, but obviously it's about the vision. Like I know one you I'm close with. He's got peas anyways, but he only put down like maybe 80 grand, 80 racks to go buy a house in Birmingham, like not Birmingham's the centre, obviously that's more expensive, but just the outskirts and lay it out.
Yeah.
Why not? He's got 10k there, or whatever he put down as the deposit part. He's looking at the game like, if I put it in a bank account, it's not going to do diddly for me. If I put it in stocks and shares, I don't think I'm going to get diddly for it. So let me just put it in a property and watch the thing rise. Obviously, it's not guaranteed to rise, but
he has an asset that he can sell.
Exactly.
And it's a possibility he can do something rather than just sitting in a bank account.
Exactly. You know, so it's a case of, you know, even on an individual tip, it's still doable. It's just a case of the wahala that you have to take to, you know, look at a property in Birmingham or outside in Leeds or wherever the ends is that you can afford to. I think there was a show that they had, I think, was it 2-3 years ago, where they're talking about all these derelict places in Manchester. And the houses were mad cheap, bruv. I cried because I wasn't ready. You know, you're just not ready. I'm just like, brother, bruv, you taking a mick. But I'm not ready right now. They were mad, like they were talking about 30 bags because it was like a street of like old they weren't council houses, but they were just like
social housing.
So social people, like social housing people were living in there, and they were like evicting bears of them, and the houses were all derelict, and they were all going for like silly cheap prices, like 15 grand, 20 grand. You get situations like that all across the UK.
That's the council trying to get rid of them.
Exactly. And these properties usually are very good quality, but it's just a case of no one wants to buy a house.
It's the area, isn't it?
Yeah, exactly. Some people want to. Some people want to buy a house to live in. Some people want to buy a house to make investments in. But some people just don't even think about a house as anything. You know what I mean? Because they're so used to renting. But it's very much possible. The moment you got a job and you got a stack, you can do anything. Honestly, it's just a case of settling your expectations. You know what I mean? If you got a nice job and you got a stack, maybe it's a case you can't buy a 5-bedroom in Greenwich. But hey, at least you can get yourself a buy-to-let while you're thinking about what you're going to do next with the next 5 years or 10 years of your life and your future. And then soon come, maybe that property goes up in price, you sell it, take the change, and then go do something with your missus or with your family member and do another thing. You know what I mean?
Look at the bigger picture. Possibilities, man.
Exactly.
Yeah. I mean, on the topic of like social housing and stuff, so in the scenario that so let's say like in Newham where we live now, there are a lot of houses before we've had the new developments, a lot of houses that were owned by the council initially, and then housing associations would have taken them over. There are opportunities for people that live in those houses to actually buy the property at a discounted rate. We're talking 20-30%. What would you say from your professional point of view is the pros and cons of that, if there are any cons or pros, in the case where families still live in there but they have the opportunity to buy that property with the discount? Is there any kind of loopholes or anything that they need to be conscious about?
I think with the system in place in terms of financing, there isn't really much cons in regards to that. It's about what you like and consider, because I could see a council flat and personally for me it would be nice. I'll like it, but somebody else might say that's not for me really. So if it's for you really, let's put the scenario a bit more concrete. If you like the property you're living in and the government are about to give you a discount using the right to buy, then why not? If you've got the money and the affordability matches and you like the place you have, then there can never really be a con. Obviously, if usually it's going to be a flat, and if it's a flat, that means it's going to be a lease, and you're going to have to pay ground rent service charge. But if you had to buy a flat that wasn't a council flat, it will still be the same thing anyways. So to be honest, it's a benefit really. There's not really a con for it. It's just a case of making sure you can afford the repayments. A lot of people have got the right to buy and they just don't exercise it, and the government really and truly want people to exercise it, hence why they've given out those deals for people, because they want to get rid of the stock. They don't want to be responsible for it. So if you like the property that you're in, it's good to go. Obviously things such as the whole Grenfell thing happened, obviously, so, and you've got a lot of situations where there's we know the words gentrification, where they're trying their best to like get rid of a certain or not they're trying to get rid of somebody, but as in
it affects a particular demographic.
Exactly. If you got a council flat and they don't really want the council flat there no more, they want to knock it down, but the right to buy is still on that, they'll let you do the right to buy, but they'll obviously make things difficult in regards to keeping the communal areas clean, and like making sure there's a good police present. So a lot of lenders will factor that in anyways. So if you've got I've seen lenders reject properties because they don't like the area, because if you've got an area that's kind of like hoodish or bad reputation, or they even find that cladding on the Grenfell thing, they won't lend anyway. So in reality, you won't be able to, you won't the drawbacks are there, but the drawbacks will more be the fact that you won't be able to buy the house. If that makes sense. Because the lender will stop you, because they'll be like, all the lenders will say this is a dead yard. Like there's too much crime. The property's got Grenfell cladding. Like there's too many. Like sometimes they'll even reject you. There's too many social housing tenants in the property. So some lenders will say, look, if you've got more than 90% social housing tenants, we don't want to know it, because that shows there's not a market for this block.
Yeah,
you know what I mean, the marketability of this block ain't there, because how many private people are buying it? So if we were to repossess it, who are we selling it to?
Yeah,
nobody. You understand?
Yeah.
So with the right to buy, it's all blessed. But the only drawback is if they don't rate the yard, or you don't rate the yard, it's not going to be worth trying to, because you won't even get a mortgage on it. You know what I mean? Because every lender will just keep shagging you effectively. You know what I mean? So yeah, but it's a good scheme. If you got any schemes like that to help you out, always go for it, man. You want to buy up your community and your land. You know what I mean? It's always the case, man.
Talk about schemes. So what's the cons of shared ownership?
Shared ownership. The cons. So what do you know about shared ownership?
So I'll tell you what I know.
Yeah.
And this is just what I know.
Yeah.
So I know that. So a lot of flats, for instance. So let's say Newham, where we've grown up. You look at places like Beckton, Canning Town, Stratford. They've got all these new brand lush properties set up in these nice new developments, and a lot of them are being offered out on shared ownership, meaning that you basically own a percentage of the property, not the full percentage. So it could be 25%. They may give you a set percentage and say it's 30% with no possibility of it increasing or possibility of increasing. However, the contract might possibly work. And so what that means is where you're paying for, so when you live in the flat, you'll be paying rent, but then you'll also be paying an additional amount on top of that. That will be your mortgage payment, basically. And so obviously if it was 50% of the flat that you owned, you would then the amount of money that's coming out of your account will then be, I guess, a portion of your mortgage and your rent, but it's only 50% of the total value of the actual property, right? So what are the pros and cons of that? Because there's a bit of a stigma amongst the people that I know around shared ownership, and I think it's purely just because, again, it comes down to but you don't own the whole property, whereas actually I hear stories of people that find a way to maximize on the shared ownership. So you could talk a bit more about that. What does that look like?
So when it comes to things like this, I always look at it like this. We can always go really, really deep, and I'll go deep just to give you an idea as to my rationale behind this. Every property that you own ultimately is owned by the Queen. Yeah? Let's just keep it 110. So you are a freeholder. You know what I mean? Have you heard of the term freehold?
Yeah.
Mm-hmm. You know that's an insult sometimes when they call you a freeholder or freeloader, because it's a case of you're just holding this for free for the time being, but you're holding it for somebody else. You understand? So all the land on this, all the land that you have your house on is technically owned by the Queen via the government. Hence why you pay, council tax, and you know what I mean. You have to pay certain taxes upon you sitting on the land. So this is just another level to it. Do you understand? So either way, you're not going to ever own anything outright, because everything on this land is free, and effectively what once was free is owned by the government, and you pay taxes for that. So that's all just basically what's that word called? It's basically an image thing, if we're being honest, because in reality, you don't know what's coming out in terms of my bills, and why would I care what you think about my ownership status when we all ultimately don't own anything outright like that anyways. So that's already a situation where, as an advisor, I wouldn't touch upon such opinions, because it's a case of, come on guys, you know what I mean? Do you want a house? If you don't want to do it that way, then you don't have to do it that way. Just
to clarify on what you've just said there, then, so if someone's paying their mortgage for 25 years, which is like a normal, amount of time for people to pay off are you saying essentially at the end of that, you own it, but you don't own it because the Queen and the government own it? Listen, I know. I'll use this as an example. You can have a house that you own, outright, and you want to do something to your yard. There's a thing called planning permission. Who are you getting planning permission off, my guy? The government.
then what's the wahala about a shared ownership? I understand it from the point of view that if it's personally to you, but not if it's people watching you that, you know what I mean? If it's that, I'm just like, allow that. But if it's a case of you just personally want to own the property and you don't want to pay rent, that's different. I get you don't want to pay rent. But in terms of the whole, I want to own something outright so people can, that's fugazi from my mind, because ultimately you're gonna have to get permission for somebody for something at some point for everything you're doing in regards to property anyways, because ultimately you have to pay people. So if you wanted to do, for example, a loft conversion or a extension, you'll have to look at planning permission rights first and foremost. So and that's if you don't even have a mortgage as well. With mortgage or without mortgage, you still have to go to, because the government want to know what you're doing to your place. Because if it affects the way it looks, it affects the
structure and all of that.
Yeah, exactly. So those restrictions are always going to be there. I'd say the one thing with shared ownership is the fact that usually with shared ownership, there's usually flats, usually leasehold, and obviously you have to pay rent. Now, in terms of affordability, you could get situations with shared ownerships where the affordability matches somebody else that's paying a mortgage, like what you said, on a 25-year deal kind of thing. So with shared ownerships, my take on shared ownerships is it's just a stepping stone. I always feel like if you're doing a shared ownership, it's really just a stepping stone, just to what's that word called, just to get your foot on the property ladder. You understand? So I never look at it like, oh my gosh, you don't own the property. You can, a lot of the shared ownerships, they call it staircasing, where you can have the right to buy more shares. So usually a lot of people staircase, and some people don't staircase. And if you don't staircase, fair enough. The little share or the big share that you've purchased of your own equity, once you sell that property, you'll get that back plus more. So it's just a stepping stone at the end of the day. Some people have made it work and they've staircased all the way to the end. I've helped, like, I've had applications, I've helped ladies and clients that I've had in the past staircase to 100%. It's possible. But ultimately they still have a little bit of mortgage left anyways, hence why, I was involved in the transaction, you get me? So shared ownership's just another scheme. They're all schemes at the end of the day. They're all schemes, and it's more, with these schemes, it's more about your circumstances, because I've seen situations where shared ownerships work perfectly for people, because the shared ownership, what they're paying rent plus mortgage is less than what people are paying rent. It's less than what I've seen mortgages wise. Understand? Then I've seen shared ownerships for other people where it's like, brother, this is dead. Don't even do it to yourself. It's sad. You're paying 2 bags for nothing, bruv. You know what I mean? You're shaking
that 2 bags would be their mortgage,
bruv,
and the rent,
bruv,
but then they own 25% of the whole property.
It's mad for them.
Which is more than normal rent of the average cost of rent in London.
So with all these schemes, you have to understand, especially with finance, it's more about, do the clothes fit you, not about the clothes itself. There's no such thing as a bad scheme. It's about, does that scheme fit you? Because a man that's on a certain amount of income, or a man that's got a certain amount of children, or a man that's got a certain age, certain things will work for them for certain schemes. But certain things from the next girl or the next man won't work. So the way people should look at finance, they have to look at finance very selfishly. Forget about the schemes. Honestly, the schemes are just schemes. There's gonna be new ones. They're gonna change them. They're gonna chop and change them, mash them up. The shared ownership schemes in Newham are completely different from the shared ownership schemes in Redbridge. The shared ownership schemes in Redbridge are completely different from the ones in Greenwich. They all have different rules. Notting Hill Housing will do some in certain locations, and they'll have their own rules on Notting Hill Housing. Then another housing group will have their own rules on that one as well. So some shared ownership schemes require you to be a certain profession. Some shared ownership schemes have a minimum amount that you have to put in. Some shared ownership schemes have a minimum amount of salary you have to put in. So it's all about, really and truly, do the clothes fit you? So for some people, shared ownership scheme is dead for them. So some people, it's perfect. It works for you. In fact, this is your saving grace. Understand? So the way finance, and I get it, because I get, I speak to a lot of clients a lot of the times when it comes to finances. Everyone looks at finances more so from a materialist point of view, where it's like, what's the interest rate? What's the scheme? What's the deal? What's the loophole? What's da-da-da-da-da? But they don't ask themselves the question of, what's my income situation? How long have I been at my job for? What, am I on probation? Do I receive bonuses? You understand? That's the way I'm looking at it as an advisor, because the market is there. The market is like Googling. It's like Wikipedia. And I read. You can do it. I can do it. The idea is more so knowing you, and you need to know yourself as well.
Your capabilities.
Exactly. Know your capabilities, because if your capabilities is such that shared ownership is dead for you, you'd know that. But if your capabilities is that it's not dead for you, you'd know that as well. But a lot of people, what you tend to find with the finance game, is they don't know their situation. So for them, everything's a mystery. Once you know your situation, some people, I look at them and I'm like, why are you looking at shared ownership, bruv? You're caking, bruv. Go buy a house, cash. They even get mortgage. They even take mortgage from me. I'll be ripping you off, my guy. Like literally, you see some people be like, what you doing getting a mortgage, my guy? You know what I mean? But obviously, it's all about the person's situation. You understand? So once you look at your situation, some situations, the case of shared ownership will never work for you. You know what I mean? Some people's situation, oh my gosh, it's your savior. So with financing, this is the big thing, a gem I'll drop for people is it's about your circumstances.
Right.
You know what I mean? It's about how much you earn. Because a lot of the time, the lenders and the banks and the schemes, they want to know what your situation is. Because they've got a yay and nay box, basically. There's no maybe with them. So even with the shared ownership scheme, not everyone's going to be eligible for it. You know? Not everyone's going to be eligible for it, honestly.
Talking about eligibility, people that have debt history, specifically CCJ, there's something that's what's the equivalent to like when you, there's another term for it.
There's
when you like when basically
impaired credit.
Yeah, there's another term.
Isn't it like a mark on your name or
but
your?
It's like like you couldn't pay off a loan of some sort or whatever.
Yeah.
And so now they've said that's fine, but you now have this on your account.
Yeah.
Is it an arrears on your account?
You are
Yeah.
in arrears, but there's a
Arrears.
term for like when
It's almost like a stain on your name.
it's like you have this for like 5 years, for instance, and it means that after that. But anyway, I can't remember the term. So like, what is the situation like for people who have debt history and there's a mark or a stain on their name of some sort? What are the difficulties, the complications with getting property?
Having impaired credit, again, and this is the thing about finance, there's no real answers until you see the person and see their situation. It's very much possible to get a mortgage with bad credit history. I've had clients who've literally helped a guy with a buy to let case. He released equity against his property. He'd missed a bag of payments, missed bag of credit card payments. Obviously had defaults that he'd settled, had some defaults that he didn't settle. He was in the process of repaying. But there's lenders that will help. Those lenders that help. Obviously, you're going to pay a premium interest rate. It's not going to be cheap, but people will help you out. It makes it difficult, but it's just a case of biting a bullet and saying, yeah, if you really want the finance, are you willing to pay for the let's be honest, if it's your fault or not your fault, for the misfortune of having bad credit history, are you willing to pay?
So bad credit history and having a low credit score is quite different from having a CCJ. Is when you
CCJ is all involved. It's all involved. It's all the same.
So if you've got that stain, whatever it is, where basically for 5 years that stain is on your account, are you saying that you can still
so
there's
there's different. So just to give you a bit of background, I don't want to get too technical and jargony. So with what they called impaired credit, so the FCA has impaired credit guidelines, and you've got lenders that work particularly for what they call impaired credit. Impaired credit is anything such as bankruptcy, CCJs, county court judgments, defaults, and obviously
That's it. It was
mispayments.
default.
Yeah,
It's
defaults.
when you have a default on your account.
Default.
That's what I was
CCJs are
thinking.
worse than defaults.
Oh, okay.
Yeah, defaults are just basically
You didn't pay off for debt or
You didn't pay off
something.
for debt. CCJ is you saying not only did you not pay off the debt, which we sent people to chase you and you didn't respond, so now there's going to be a county court judgment. So that's what CCJ stands for, county court judgment, basically meaning that you are misbehaving so badly. It went from mispayment to you defaulted. So default basically means they either close your account, saying that, okay, look, we asked you to pay, you're in arrears, you're still in arrears, cool, we're closing the account, and we're going to send somebody to come find you. So they'll sell off the liability of chasing you for the liability to somebody, an external company, and that'll be on your record. And then that company will then come for you. And if that company can't get it from you, then it goes to the CCJ. And then the CCJ county court, whether you're there or not there, they'll do the gavel and say, hey, 5K, this guy's is an idiot. You know
So
what I'm
you're now in 5K debt.
Yeah, for example, let's say just
Like
an example.
but you're in debt. It's
Yeah,
not like
you're
they're
in
gonna take
debt.
you to
Exactly,
prison, but-
exactly. So they'll say whether or not it's settled or it's settled or it's not settled, and that'll be on your records basically for X amount of time, whatever the case is. Now, what usually happens is, everyone's situation will be different. Some people will settle it. Some people are in the process of settling it. Some people will talk to the courts and talk to the creditors that have taken them to the courts and say, all right, this is the debt management plan, DMP or whatever plan or debt relief order they get in place, and then that will be on their direct debits or their standing order or whatever the case, to pay that person for X amount of time off of a new credit arrangement that they've agreed after the CCJ or after the fact, basically. Now there's bare different ones. As long as it's not a bankruptcy, and even with a bankruptcy, it's only for a year that you can't borrow anything for. But after a year, you can come back to the credit game. That everything's doable in this life, except you just have to pay the premium for it. So I've got clients that I've helped them get a mortgage. The guy had a default. And brother couldn't tell me what it was. He just told me a story. I was like, yeah, bruv, what are you telling me, bruv? You know what I mean? Went back to them and said, brother, the guy said that he was sleeping late one day and his eye was sick, bruv. What do you want? And they were like, is he ready to pay 6%? Yeah, cool. Obviously, the lenders will ask you a bit more questions just to mark up the file. But in reality, there's lenders that are expecting people that have bad credits. You know, we've got, like, when I'm doing my research for people that have got bad credit situations, I ask for your credit report. Once I know what your credit report is, if it's a proper bad, and I haven't seen one that's that bad. I've seen ones that have shocked me, and people have said yes, and I'm like, damn, like.
The lenders have said yes.
Yeah, lenders have said yeah, and those are the ones that shocked me. So I'm waiting to see the day that I really, because the ones I thought was undoable, they got done. So. Like you must have killed somebody as well. Like, you must have committed murder or something for them to say no. Because the one I saw that got it through, I thought, yeah, bro, this is gonna be sticky. When I spoke to the underwriters, they're like, yeah, it's fine. Just give us some reasons. Like,
but isn't that because it still benefits them in a way? Because at the end of the day, if that person can't pay up to the terms that they've now drafted, and bear in mind that would now be a 3-4-5% increase in the interest that they were meant to be paying. If they can't pay it off, it just comes back to them.
They take the house.
It just, so it's like, so whether they say yes or say no, they can have that criteria maybe because they don't want the headache. But when it comes down to it, they don't. It's not a loss to them. They haven't given over the house to someone that can't pay it off, and now the person's run off with the house. The house just comes right back to them, and that person's now in debt. Exactly. So when it comes down to it, it makes sense why they would still allow people. But for certain schemes or certain lenders, they may say, actually, our criteria is
so your high street lenders, majority of high street lenders, if you've got bad credit history, just act like they don't exist. Just loan them as a bank. don't think about mortgages with them. So a lot of your high street lenders, you know, your vanilla, I call them the vanilla lenders. So the ones that you can see with your eyes, like your Nationwide, your Halifaxes. If you've got really bad credit, they will reject you all day, every day, and twice on a Sunday, my guy. You know what I mean?
Really?
That's not a joke. Like, no, really. If you even come to them and say you missed a bill, they'll be like, "What, miss what? Pick the girl." You know what I mean? They'll come shake me, brother. Call me. I'll be like, "Don't give us people like that again." You know what I mean?
Yeah.
But there's other lenders that they're thriving for it. Obviously, they're thriving it. That's basically what they live for. They live for people who've got bad credit history, who've done a bag of madness. Those type of lenders, you won't know who they are. They're like the ones that, you know, we work with and we talk to. They will help you. So there is no situation that's that bad. It's just a case of just making sure the story makes sense. Like, not to be funny, no one's ever given me a rubbish story as to why they missed the payment and they went into default. Everyone's story is very sad, brings tears to my eyes. As long as you got a tearjerker, you're good to go. You know what I mean? But if you come to the lender, you're like, look, you know what? Yeah, ban Barclay card because they didn't rah. You know what I mean?
They're gonna
come on. They're gonna be like, this guy. We can't even trust the guy to even lie to us about this story. You know what I mean? The impaired credit, FC has a thing called impaired credit clients. So impaired credit basically means that all these lenders that give financing with high rates of interest to people that got bad credit, they have to do really, really intense due diligence. Basically, it's intense to the point of view of a client. And obviously, when I first was dealing with these type of applications, it was intense to me. But now I get what they're doing. All they're doing is trying to catalogue and evidence that they're not being a loan sharky kind of lender. They're making sure that you've changed your ways. They're making sure that you've got the income available. They're making sure that you can borrow what you can.
That they're not trying to set you up for failure.
Exactly. And as long as you play ball, and it's a very easy ball to play, you know, it's literally like you're playing with a little child and you're giving them a little, you know, them floaty balls, and you're like, listen, just kick it, bruv. There's not even a goalkeeper, bruv. You know what I mean? If you miss this shot, you're dance. You get me? So usually they'll let you know. They'll even tell you, look, tell us why. Okay, tell them why. Then I'll say, all right, send us this document. It's a document you can get. Send them the document. They'll say, all right, dance for us. You dance. They'll literally film you.
Dance for your uncle.
Dance for your money. You dance for your money. They'll give you the money, by guy. You know what I mean? They just want to make sure they've got a tick box of things that they have to ensure that they're not making it look like they're being predatory lenders. You just have to follow that. It's just a case of you just have to bite the bullet for the interest rates, because the interest rates, obviously, you're looking at, I've seen that they're high, bro. 6%, 7%. But even then, you deep it like if you talk to like the old timers, people that are 50 years old, when like Santander was Abbey National, they'll tell you, or when HSBC was I forgot the bank's name, but when all these banks had different names back in the day, interest rates used to be up to 12%, and that's for people with decent credit history. They used to be up to 6%, 17%, 18%, 25%, 30%. So in reality, even now, people are more so getting a bit frazzled about 7%, 8%, because they're seeing all these nice little 1%, 1.5. But if it's affordable for you and the mortgage repayments are coming out to like 1,004, 1,005. You're not out here trying to get 1.2 to show off and say 1.2 or 7% to show off and say, well, you just want your house.
Yeah.
Because you're going to pay the house off in 25 years. And in another 5 years, your credit history, I think it's 6 years. Your credit history, your report kind of recycles itself to an extent. So by the time 7 years is done, you'll probably be back on the high street boys anyways. Do you know what I mean? Depending on how bad your credit is, that is.
But isn't the flip side then to a generation paying 12%, 12, 13, 14%? Isn't the flip side to that at that time they were paying for properties though that were 40, 50,000, the value of the property.
Yeah, but
and so it's flipped in that now properties are 450,000 and you're paying less, but when it comes down to it, you still maybe paying more like relative to your salary, you're still paying the same or more.
Inflation means that all these numbers you're talking about don't even mean anything anyways, because if you deep it, if you're 3%. Talking about a 40k house, people are getting paid like, let's say £300 a month, and that was enough to live. So it's all relative in reality, because the inflation was eating up everything anyway. So cool, you're paying 20 or 15% on a house that's worth 50k, but who was really making 50 grand a year them days? No one. Everyone was on like maybe 15 grand, and that was enough. You know, you probably are a king if you're on 20k. Do you know what I mean? In them olden days. So imagine they used to have what they call it, shillings and farthings and all them type of things. Those are like a quarter of a pound and that. Now a pound, you know what I mean? You might be lucky if you get a Coca-Cola, you get me? So it's one of them ones. That's the thing about the finance game. A lot of it is a lot of the finance world is a very, very showy world, but in reality it's a lot more basic than what people think it to be. It's really more just a case of...
It's the knowledge, isn't it?
It's about the knowledge about your situation. Because every situation is so different, there'll be an outcome each time. I could bring you to Halifax, and I could bring you to Halifax, and one of you will get rejected. And then you come away and say, Halifax is such a rubbish, lender, and you come away and be like, I love that. That was sweet, man. You know, you're feeling yourself. You got your house, innit? But the reason why it's different for both of you is because you're different people. You understand? You've got a different circumstance. You might have kids, you might not have kids. You might have 10k worth of debt, you might not have 10k worth of debt. But you might have defaulted on a debt once. You know what I mean? You might be on 50 grand, you might be on 100. You might have a deposit of 20,000, he might have a deposit of 60. So it's all relative to your circumstance. Finance is almost like jigsaw. It's not a case of, is there a scheme or is there a riddle for me to come and do? Because bare people do it to me. They will come up to me and be like, what's the trick to do this and that and this and that? And I'm like, brother, I don't know what you're talking about. How much do you earn?
What can you afford?
What can you afford? Because once I know your information, I can put you with the guy that will look after you the most. You understand? And that's what real finance really is about. It's the same way when you're looking at stocks and shares. Someone might come to you and say, Google stocks and shares are the sweetest, but bare man can't afford Google shares for it to be sweet like that. You understand? And it's the same thing with the mortgage situation. Everything's all sweet. You can get money, but it's all about what you can do in your circumstance. Because finance ultimately is about you. You understand? It's about what you can gather. It's about how much you can save, how much you can stack, how much you can be stringent within your day to day. Because sometimes some people are fortunate. They, great granddad knocked his clogs. They gave him 100 bags. Man's nice. Certain people, they don't have that luxury. They have to grind and save up maybe £200 every month for the next couple of years with their missus, and then hopefully they can get something. You know what I mean? So every situation towards the journey of getting a house is different. So I'd say the biggest thing is making sure that you've got your ducks in order. You know what I mean? Knowing what your outgoings are, knowing how much you're willing to pay for a house, knowing how much, because a lot of the time banks lend on affordability. So the simplest thing to do is go into like a bank calculator. So maybe like Halifax or HSBC, they've got like calculator. Just put your income in there, and they'll let you know how much potentially you can borrow. Put
your household income as well if you're married
with a partner. Exactly. Overall. These are the type of things you should be doing first, and then you come see an advisor, and I'll get you the best deal from your circumstances, because there's so many schemes, there's so many rules, there's so many things. Like it's crazy. Like I'll see situations where somebody will see another advisor. The advisor won't, it's not that they do a poor job, but they might just advise them off of the easiest bank, not really knowing that person's circumstances, and that person gets rejected. And they're like, I got rejected. And it's only purely because they didn't ask the right questions, because they would have found at that bank, if you've got, for example, I use an example, because of COVID-19 now, a lot of banks are getting very, very touchy with self-employed clients. So if you've got like declining profits, or you've taken any furlough or grant money, not furlough because obviously that's for the employed people, but grant money, self-employment, there's cease or whatever it's called. Some lenders might not even give you any money, or if they see a declining profit pattern, they'll just decline you straight off the bat. Then some lenders are like, look, don't worry, man, we got you regardless. We want you. You know what I mean? But if you're not up to, if I don't get the right information from you on that, you might think you will never be able to get a mortgage. And it's likewise with evaluation as well. I had one lady that I helped out with her right to buy. She literally got rejected by a lender. Now she was like, because she got rejected by the lender, in her mind she thought she could never buy the house because the lender was like, you got a balcony. And even I was like, oh shit, the balcony thing's a bit mad. But we got a lender that could do that because we knew her circumstances, you understand? And that's what it's all about. Because all of these banks want to give you P's, but why they want us to work on their behalf? Because the banks, in reality, we cost the banks money as well, you know. But the reason why they want us to work on their behalf is because we match them to the right client that they want.
It's the middle work.
Exactly. Some banks literally are out here just for bad credit people, impaired credit people. Some banks are out here for self-employed people that are on contractor schemes. You understand? Some banks are here for your average 9-to-5 worker. Some banks are here for your nurses. Some banks are here for people that live in that area. Some banks are here for flats. Every bank, I'll go to conferences with banks and they'll literally tell you, we want this type of client, my guy. If we see anyone that's different from that, we'll delete them. We delete them off our systems. You get it? So, what my job and what the job of in finance in reality, especially for those that are looking for properties, is just to make sure you know your situation so you can get the bank that wants you. Because the banks are going to make profit regardless. But the thing is, they don't want to make profit on the people that they haven't geared their schemes towards. Yeah. You get me? And it's the same with the schemes as well, like shared ownership, right to buy, help to buy, all these schemes. There's certain people that they fit for and there's certain people they don't. Just a case of just knowing your situation well enough. So looking at your statements, little things like I've started doing recently, just holding on to my receipts, seeing how much I spend every month. Do you know what I mean? Like on frivolous things. I'm not talking about my standing. I know my standing all the expenses. Just what I just generally on petrol or whatever I'm buying. Just knowing what I'm spending, so I know exactly what my situation is. Knowing what your ingoings and outgoings are, what you're spending your bills on. Little things like that help you get an idea as to what your situation is. You know what I mean? Yeah,
that's a good healthy habit as well to have, isn't it?
Yeah. I thought it was a waste of time, and I realized, snap. Yeah, you look at your receipts after you realize, right, I'm a mad person.
And there's some good apps at the moment that are out there that help you do that. Like I've had Monzo for a number of years now. So like one of the things that I do is I've got an account where my salary will go into that. And then my direct debit, standing orders will all come out of that. But I intentionally then take out an amount that would be my budget. And it changes every month because you don't really ever know completely what your budget's going to be. That's not how life works. But I take a lump sum of that and I put it into my Monzo account because that's my everyday, day-to-day spending. And what Monzo is really good for, in my opinion, is that it would tell you, like, you can put things in the category. So if I go to Tesco and I spend £50, for instance, I can then just like press a button and it will put it into the category of shopping. Or if I send my wife some money, for instance, I can put that into like personal. But then what it will do is it will, like, this is if you like data and you like looking at stuff, but like I like to then know what was spent on shopping, what was spent on childcare, and there's other apps, I think Plum is another one that allows you to do that. And I think these apps are really good as well because they allow you to also save money.
That's what you need,
in terms of like you can save £1, so I think it will round it up to the nearest pound. If you spend 73p in the shop, it would then round up the amount to £1, and then the difference will go into like a little pot. So like I think there are different ways, but I think like you said, you got to be intentional.
Yeah. I think the thing about mortgage advice is that everyone thinks as an advisor, I'm gonna give you keys to, like, I don't know, maybe getting more than you could have and should have. But in reality, it won't work like that because everything's laid out in bare because everyone's looking at your bank statements. They're not really looking at the policy of the lender. Do you know what I mean? Like I know all the policies of the lenders, and I'll tell you this, I don't even bother trying to remember any of them. Why? Because they change all the time. I'll give you an example, for example. So, the world is an ever-changing world. So, like, obviously this won't apply to a lot of the viewers, maybe it might apply to some, but for example, the EU situation now, we've left the EU, and a lot of banks were treating EU citizens like how they treat British citizens because that was the deal under the EU. Now they're not discriminating, but now EU citizens have to get what they call leave to remain, a status in the UK, basically. So all that basically means is that you need to now prove that you've got status to be in the UK effectively after the Brexit deal. So some of the banks that were letting people run through normally, suddenly, no.
Close the gates.
So what's the purpose of trying to remember all the knowledge that all these banks are giving as rules when they change their rules all the time? It's just policy, my guy. You understand? It's just rules. The reality, the real crucial element of finance is knowing your own situation. Because ultimately, I can tell you 110 things, and when you look at your income, you look at the amount of savings you've got, you look at your job, it can be oh my God, this is excellent for me. Or it can be, geez, I might have to go look at some other way of doing this. Or I wanted to live in Barking, I might have to move to Kent. Or, oh my gosh, I can actually live in London now, because I didn't know I could live in London. But it's about knowing yourself. That's the ultimate key to the game, really.
Yeah.
All right, so I got 2 questions. So the first one is, when you get rejected, is that show up on any type of record? Is there like a trail of rejections of some sort?
Yeah. So on your credit files, everything that you do is recorded.
Right.
So all your rejections are recorded. But ultimately, rejections for finance don't mean nothing.
Okay.
Won't mean nothing at all, because the rejections are usually going to say why you've been rejected. So if you're rejected because you just didn't meet their policy, it will say that.
Okay.
You know, if you're rejected because you've got bad credit score, it will say that as well. You understand? And it's not going to affect you for the next lender, because the next lender will be aware of this.
Okay.
Obviously, the individuals that are looking at your application, such as your underwriters or, for example, myself, I won't know that unless you tell me. But if I was to get your credit report, it will show that you've been rejected and you've done an application with X, Y lender, but it won't make no difference. Okay. So I've had situations where I've had applications or clients that I've helped out where one lender rejects them for whatever fugazi reason. I'm like, cool, we'll just move on. You know what I mean? If we knock on a door and the person don't want to let us in, you know what I mean? Same way you go to a club and they say, oh, we don't like you, or you don't like your trade.
Go to another one.
Go to another club, bruv. You know what I mean? That's all it is. Just go to another location, bruv.
The club is dead anyway.
Exactly. You know what I mean? You don't want my money? Cool.
Dead penthouse club.
Yeah. You can't get to pack. Cool. I'm going freaking corner shop there. You dumb. You
Stratford Rex.
You know what I mean? You know what's there?
Cool. And the second one. All right. So my situation, I'm a self-employed actor. I wanted to know, for all the self-employed people out there as well.
Don't just say actor, bro. You're famous. You are Denzel's heir to the throne.
I claim it, bro.
And man, the next British actor
Taking
taking over the States. The next Damson, I don't even know the rest of them. Daniel Kaluuya.
Jeez.
The next, that guy.
Don't worry, I know where you're going, bro.
Yeah,
I know where you're going, bro. I claim it all.
Claim it.
Claim it all, and it's all coming real soon.
Let's go.
Very
Amen.
soon.
Sorry, I distracted you. I needed to put that prayer out there. We pray on this podcast too, you know.
Thank you, my brother.
Amen.
So yeah, what type of hurdles would us self-employed people face when it coming to applying for a mortgage, especially like with the whole financing stuff? What type of barriers are there in front of us?
Hey, you've made it halfway through the episode, and just for doing that, we want to celebrate you. So we're going to give you an opportunity to get a discount code. Not 15%, no, it's going to be 30%. So what we're going to ask for you to do is type in HTGM on www.goodmanfactory.com, HTGM, and get yourself a 30% discount code for being such a loyal subscriber. Thank you.
If you think about it now, if you have only been doing your accounts for 1 year, then obviously it's going to be very difficult to prove to a lender, because lenders need at least 2 years.
Right.
It used to be the case it was 3 years. Now they only need 2. So they've even been more lenient. But if you don't have much accounts, it's going to be difficult.
So wait, sorry. So when you say accounts, do you mean declaring your taxes, doing tax return and all that stuff? Okay.
Exactly. So obviously with self-employed clients, you get a situation where some people obviously don't declare no taxes. So if you don't declare no taxes, then your self-employed situation doesn't exist to nobody. Obviously to yourself it does, you've been taking cash in hand, but in terms of a lender, they need to see things on books. So they're either taking what they call the SA 302s. So that's a tax summary and tax calculation that you can get from HMRC's website when you submit it as a sole trader. Or alternatively, if you use a accountant and you're registered limited, you know, say for example, you LTD,
right.
Then obviously the lender would want the accounts, the last 2 years accounts, and they'll take an average of that. Now, there's no real barriers. It's just more so knowledge about your own accounts and your own affairs. Again, this goes back to my original point. If you don't know your own accounts, you're going to find life very difficult. You understand? So you need to know your accounts, have an accountant there, because, you know, we're getting to that age, you need a lot of professionals in your life. So it's not expected. And when I talk to a lot of self-employed people, I expect them not to know much about their situation. But if you've got a professional like an accountant that's on job, then when I tell you to get certain things and you go to your accountant, that accountant will have them things ready for you.
Fast.
You know what I mean?
Yeah.
Because at the end of the day, there's no point, because you're an actor or you're a plumber or whatever the case is, you're too involved in your own life and your own profession to make your own peace, to really be trying to break down the nitty gritty of SA 302s, SA 100s and all that jazz. Not that it's complicated. You can
just don't have the time for it.
You just don't have the time. And that's the truth. You just really don't have the time. But as long as you know yourself well enough to know who's dealing with your accounts, your tax reporting status. Now, if you that's dealing with yourself, then obviously I ask you this question, you don't know, that means you're crazy. You don't know what you're doing. But if you have somebody on point that's looking after your tax situation, then you should be fine. So with your tax situation, obviously I don't want to get into your tax situation, but do you do your own?
I've got an accountant.
Exactly. Yeah. Then there's no wahala. There's no wahala. So all it is if you've got an accountant, all you have to do is say, accountant, or Sheila or John, Toks, my mortgage advisor said I need X, Y, and Z. Your account will know straight away, and I will send that to you, and I'll do the rest. Because you have to deep it between you wanting to get your house and everything else that's going on. Everything else that's going on, I'll be honest with you, it will bore you to death. It's not entertaining. Like it's me just on a calculator and looking at policy, and it's the same with your account. You just, you know what I mean? You just want your house. So as long as you know your account, you know who they are, and you've got a good relationship with them as a self-employed person, simply anything that's requested for you to prove your income information, you can go to your account. If you want to learn about it and what they do and the rest, I can give you that information, but in reality your account will get all that sorted for you. The only drawback really is just the fact that a lot of lenders go off your average, so your average last 2 years. So you know, when you've got spikes in good performances and downward dips, then obviously your averages can come out a bit mad if you're coming to see me on the year that you got a dip. So one drawback is the fact that you have varying levels of income, which means that year by year what you can do and what you can borrow changes so drastically. But the benefit is you can effectively, unlike the people that are on fixed incomes, manipulate your situation so well purely just by coming to us to start an application when you're at your very best. So if you've got a 2 years, the next 2 years are sick, bruv, this is the time you should be looking to get a yard if you've got a deposit built up. Do you get it?
Right.
So if you've got a sick run, if you know you've got a dead run for last year and this year is going to be dead as well, you know,
just hold off
take
a little
time.
bit.
Yeah, take time. But if you've got 2 years and they're sick 2 years, brother, that's the time to go because you're gonna look you know strong. Declining profits is something that lenders are looking at now. So if you had one sick year and then you had a big dip, some lenders might just decline you.
Yeah, so the last 2 years have been hard for, I imagine, a lot of people. So would that would play a big part, right?
Yeah. Don't get twisted. You can get lenders that will borrow to you, but it's just a case of you're like, say for example, that you had 100 lenders that were on your side. Now you've got down to 40. You understand? Obviously, you really want 100 to make sure you're getting the best deal possible. Yeah. But at the end of the day, beggars can't be choosers. But I'm just giving you an idea of one of the drawbacks. But in reality, being self-employed at the moment, due to the whole COVID-19 right now, has made things a bit more harder because some lenders are being a bit more restrictive as to how they're calculating income. So one of the lenders, for example, I was helping out one of my clients today. One of the lenders, I found that they're not even doing averages. They just want to know which one's the lower of your last 2 years. I was like, you just want to go for the lower of the last 2 years. Some lenders are going crazy, but there's other lenders, literally, like I said before, you've got banks that literally want a certain type of clientele. There's lenders out there that just want self-employed people. If they hear that you're employed, they're like, oh, we like it when it's self-employed. You know what I mean? So some lenders are like, look, we'll take your first year's accounts. You get me? Some lenders don't even want to see 2 years. They're happy to just take your first years, and that's good to go. They want to know that you've been trading for 2 years, but they'll just take off of your first. So everything's possible in this game because there's so many banks out there. So in reality, to the drawbacks of being self-employed, the drawbacks are that your income varies. So that means year on year, stuff can be very different for you. But one of the benefits is that same drawback is your positive, which is if you've got some sick years, you'll be looking better for it. Outside of that, and lenders being a bit more restrictive, all in all, it's all the same. You know what I mean?
But I don't know, maybe it's a rumor, but I kind of heard that lenders would expect a higher deposit from self-employed people.
That's what I mean. That's what I'm saying. Every lender's got different rules.
Right, okay.
So, for example, I know a lender right now that I literally just saw they've got a new policy for self-employed. You need to put down 25% minimum. But I could easily kick that lender out of the window, to be honest, because I've got lenders that will accept 10% same way.
Right.
You get me? So, it's a case, because I know the market, it's a market at the end of the day. You know what I mean? Everyone's apples ain't the same. Everyone's bananas ain't the same. So, it's a case that some markets, you've been Stratford, some man don't even have plantain and they call themselves a market. It's like, you're mad, bruv. You know what I mean? You gotta have plantain. So, it's the same thing. If a man comes to you and says you can only do 25% deposit, you're self-employed, and you want to put down 10%, come chat to me. I'll get you a guy that can give you 10%. You get it? That's what my job situation is. You understand? So I can get you 10%. That's no problem. I've got a bag of people 10%. It's no issue. It's just the thing is mostly just knowing your circumstances. Once you know your circumstances, you know what you're earning. Everything else, in terms of policy, we can ignore the people that you don't want to run with. Do you understand?
Yeah, this conversation is like a double-edged sword for me, because I think where it's like so key to have an expert like yourself, and obviously this is your bread and butter. You know, we're in two completely different fields, and that this kind of knowledge only comes really from speaking to someone like yourself and through conversations. But that to me is what's very frustrating. Like, because like for me, like I'm in a position of influence now, like being an assistant head in my school. And one of the first things I said to myself is financial literacy has to be something that I embed in the school that I'm in now, or in the school that I'm going to own in the future, like God willing. Because you keep saying it's about knowing your situation, but there will be a bag of young people that are currently in schools now, and they will grow up and go through the whole education system and not have a single idea about any of this. Because think about it, if you went to school, even as early as year 5, year 6, if you had an understanding of like the importance of money, maybe not knowing so much your context, because at that age you're either, you know, you might think that you're rich, you might think you're poor, you don't know the specific details about it. But if you've got an understanding that actually there's an opportunity for you to maybe own the house that you live in, or own a house, and that it is important, having that mindset of owning something and the benefits of that from a very young age, it will ultimately inform maybe the careers that you decide to go into. It will inform,
and how much work you put into what you do.
How much work you put into what you do. If you're a child and you have aspirations to do something in life, it's good for you to understand that actually the amount of money you're going to earn potentially is going to dictate what you can and can't do in certain aspects. So it's the same as like if you go to university and you're getting a grant and you're getting a loan, you're not going to be an idiot like me who, when I first got my first grant from uni and I'm like, yes, I'm rich, like, you know, but I'm not rich. It's not my money. Furthermore, even if it's not my money, I could have been so much smarter and put, you know, some of my grant away. Even if, imagine like if I was putting about £200 a month at uni away, and I'm sure there's people out there that did this, but they did it because they were aware, they knew that information. You could be, if you wanted to be, 24 and own your own property and come from nothing, cannot have the family put in and all that stuff, because you've got an understanding of the importance of money, the value of that. So for me, it's like the education around finances is the reason why poverty is so rife in communities and why it continues to be, because people, families, you know, but education, I think, has a responsibility to teach people how to come out of poverty, because it's not going to get any better.
And also adding the fact that in this reality that we live in, also always remember, that everything that you're taught is always going to be the opposite of what you're supposed to be doing. Hence why culture is important. Culture is not something that they promote on the TV or promote in education books. Outside of looking at other cultures as alien to yourself. No one tells you about the benefits of, you know, the Asian culture or the Jewish culture or even the English culture. They kind of always just show you what you're supposed to just consume, spend, you know, this fashion, this Rolex, this watch, this, you know, new designer shoe or belt. You understand? So ultimately, it comes down to the culture to kind of be the other side to the reality that you see represented on images. Because more time, you won't see an advert on a TV or on a billboard that says save your money, stack your peas. You know what I mean? You won't see an advert that says, hey, have you looked at buying a house recently? Do you know what the prices are? These are the things they're going to promote to you. So the idea is that this is where culture comes into it. Hence why if you look at a lot of cultures that are doing very well financially, they don't really get involved in the other side.
True.
You know what I mean? That's why when you see them Jews in Stamford Hill and they got their locks and they're buying a little Volvo, you'd be surprised to know that a lot of them guys are millionaires. Why? Because the culture is one of, look, the world is nice, it's pretty. I might indulge in a rollie here and there to treat myself, and you get me, go on a fancy holiday and spend my money where I need to, but ultimately there's going to be certain cultural things that I do to ensure that I'm financially stable. And being financially stable is knowing my situation, knowing what I can spend. Hence why them apps here are saying those are great ideas. Those are the simple things, because sometimes what tends to happen is we tend to look at the solutions to the problems like they're really big mountains to climb. In reality, they're just simple things such as, look, if you start with yourself and your family, ensuring that you guys got a budget and saying that, look, we want to save X amount of money for the next year, and then saying with that X amount of money we're going to save for the next year, that's going to be a deposit. You already started. And that's how everyone starts.
It informs your next decision.
Exactly.
How you're going to save, how much you're going to save,
exactly,
where you're going to spend your money, what you're not going to spend your money.
Exactly.
Yeah.
It just takes that little bit of saving, and that's all it is, just saving. So but the only way you can get there is a culture, and the culture is if you can get your family. Obviously, you can do it on your own, but if you can get somebody like yourself, like mentoring or teaching, to where you just say to somebody, "Have you been stacking money, bruv?" Little, and leave it at that. That's a seed planted. That's all you have to do. You don't need no fancy dancy program. Just say, "Have you been stacking your peas?" And then certain man in their heart will be like, "Damn man, I really did spend a lot of money on a couple new crepes and that." You know what I mean? But them little things there, that's culture. Culture's, things like what we're doing now. Like, are you stacking your bread? You see that? And now when my man promotes this now, everybody that's got peas or that don't have peas or whatever their circumstances, they'll come and they'll ask themselves the inward question: have I been stacking my peas? Because right now we've got a culture. Everyone's watching everybody else's maneuvers and goings on. But in reality, for this to work, for you to buy your own house, for you to own assets, for you to live the life you want, you have to know your situation. And sometimes knowing your situation involves those around you supporting you in a culture. Because culture sometimes dictates your behavior patterns. Because if you got a culture, like for example, you're Nigerian as well, innit? We do ballet, innit? The ballet is not ballet like ballerina, as in when you see an elder, you show them proper respect, innit?
Yeah.
But how did that happen? That's culture. We didn't have to see nothing from MTV or some billboard or Boris Johnson coming and telling us. We've been known from young. Sometimes it's just a simple case of doing the same thing that how you got to do ballet. It was a case of, hey, son,
this is what we do.
I gave you £10, yeah? What did you spend the £10 on? I bought this and bought that. You don't have nothing left at the end of the week. That's mad, you know.
Yeah, you got to slap the back of his head still.
Yeah, I mean, you can slap his head. You can slap his head. But sometimes he might just be embarrassed to the fact that he spent all the £10 and you ask him what he spent. I'll be like, I bought sweets and I bought this milkshake and I took Jennifer out for lunch, and you'd be looking at your son like, so at the end of all of that, what do you have to show?
Jennifer gave him a kiss on the cheek.
That's what happens to a lot of youths, so they don't stop. They keep looking for the different Jennifers, you know.
Then they have a youth with Jennifer and they're paying more money.
And they're slacking at here, bruv.
Yeah.
But yeah, man, the moment you can get the culture part on tap, you'll see a lot more people getting the yard thing up, because it really is just a simple case of eyes on you in the right way helps you focus on yourself. You understand?
Yeah.
Because that way you get the discipline to know how to put your finances in order. So when it comes time for to talk to someone like me, you're not coming to me looking for schemes and tricks, because I've seen a lot of people come to me for schemes and tricks. I'm just like, brother, regardless of schemes and tricks, you don't even have no savings. So this conversation is just me just telling you a whole heap of knowledge that you can Google yourself. Understand? Whereas if you've got savings, you've got a stat, you've got income, by the time you come see me, you've probably already been like, yeah, I've been looking at properties. And that's a different conversation. That's a conversation of me saying, yeah, I'm ready to actually put something in place for you. So it's just a case of the culture will be there, and I think this is part of the culture. Stuff like this is the new culture, you understand? Where we're now sharing the fact that, look, guys, it's just a simple case of stack your peas, know your circumstances, and just ask yourself what you're spending your money on. Because more time, you don't want to be a zombie out here just spending your money on thoughtless things. Like, don't get me wrong, like everyone's got their little niche. Like, I've got my niche, I'm sure you got your niche, but ultimately, like, there should be no reason why you don't have no savings at the end of the month. Do you know what I mean? And if you can get savings at the end of the month, you can save for a house. You understand? So it's just a really simple things.
This talk's been good, man. I think that the biggest take home for me is knowing yourself and knowing your situation. It's not just one size fits all or whatever. It's a very personal journey, this whole finance thing. And before this talk, I always thought that, like, mortgage and all of this stuff was so far away because of just my lack of knowledge about finance and mortgaging and housing and stuff. But there's hope for everyone, and there's a team that will cater to every different person's situation. At first it's scary, can't lie. Mortgage, housing, money, this, that, debt, it's scary. But I guess the more you educate yourself on it, be familiar with it, and surround yourself with people who know about it, then it becomes more a comfortable subject, and I guess you can flourish in that area and make decisions by yourself and keep climbing up. So yeah, thank you, bro. I really appreciate it.
Yeah, no, and that's a massive thank you on behalf of the Goodman Factory. I think one of the things that that makes this like whole community that we have here beautiful is that actually, like you said, we are creating a culture here. And I think having you come on with your expertise, you know, we call it dropping gems, but really you've shared so many things that I think there's going to be, you know, I know for a fact there's going to be hundreds, maybe thousands of people that will listen to what you shared today, and it's going to be beneficial. And I think that's what we want to do. We want to bridge the gap between people where they at now and a world or an experience that they might not be familiar with, and you've done that in terms of speaking about finances and the importance of that. So thank you. Before we finish off, because we are going to finish off here, you've shared so much. If I was to ask you to leave our listeners with 3 key things that they need to know or that you want to leave with them in regards to just property, whether it's the importance of it or whether it's how to do it, what would be the 3 tips that you would give to our listeners that they should take away today?
Oh, that's a good one. Not to take up too much time, but it'd just be a simple case of just knowing your financial situation. That's number 1. Number 2 is knowing where you want to purchase the property. So location, that's number 2. And number 3 is thinking about your family. Ultimately, this is all for your family. I mean, you know, you can buy a 2-bedroom house, but who's that second room for? Do you know what I mean? So it's thinking about your family and knowing, you know, what the legacies you want to leave behind for your family. Just having a plan for the future. We live for the present, but, you know, ultimately you're going to be immortalized by your family being here after you're gone. So at the end of the day, think about what the next step is. Because once you get the property, I'm out of the picture. You're going to be you in your house on your own with your family or, you know, your friends or whoever the case is. Just ask yourself, where do you want this property to go once you're not here? Because ultimately that property is going to outlive you. So those are the 3 things I'd always say to focus on when it comes to properties is, you know your financial situation, know who you're going to buy, and know what happens after in the thereafter. You know, some people don't care. Ultimately, some people are like, if I'm dead, I'm dead. But ultimately, you'll be gone one day, and you know you will have kids and you will have grandkids and or nephews, nieces. If you don't have children yourself, just a case of just thinking about you know talking to lawyers and finding out what the situation is legally. Especially you know you're going to be married, wife, you know partner, finding out what the situation is for that home.
Amazing. Ladies and gentlemen, you've been blessed. We've been blessed to have Toks with all that wisdom and that knowledge. Thank you, bro. You were listening to myself, Goodman Manny, Goodman Dimeji with the nice silky satin purple do-rag over there and the nice golden frames. That's it. Give him the pose. Give it to them. Yeah, we've got Goodman Malik in the background. We want to just big up the big Goodman Factory community. We've had a lot of good news this week. So we want to thank you for supporting. Make sure you listen, subscribe, share on your Twitter, share it on your TikTok, share it on your Instagram. The support is incredible, and the more you share, the more other people can hear and listen to, you know, great people speak like Toks. So yeah, I want to thank you again. Go on the Goodman Factory website, goodmanfactory.com. Buy yourself, buy your partner, buy someone a great Goodman Factory product today, and we'll see you later. Peace.
Peace.
Yeah, love for that. Thank you.